I'm Gwen Preston of Resource Maven. I'm here at the Metals Investor Forum in Vancouver. It's November, and I'm joined by Scott Close of EMX Royalty. Some of you may know EMX Royalty by its previous name, which is Eurasian Minerals, a name it had for many years. And the name change has been a recent thing to better capture what you guys are really driving, what you're really doing out there, which is
That's right.
Using your technical skill to find projects that have good potential, option them out, retain a royalty, and in doing so, generate a portfolio that makes money.
That's right. So a lot of people say, well, Scott, now you've become a royalty company. And I say, no, we've actually always been a royalty company. We started out as a prospect generator, and anytime that we sold a project or that we joint ventured one, we always held on to a royalty. Mm-hmm. And so organically, we've been building this royalty portfolio for the past 14 years. Now that portfolio is mature enough that a lot of these projects are now in the development stage or even in the production stage and bearing fruit. That being said, we do also augment our organic portfolio with royalty acquisitions when we can find those at favorable pricing levels.
Right. And one of those acquisitions is your key royalty,
That's right.
Which is the Leeville
Yes.
royalty. So talk a little bit about what that is and what cash flow it means for you guys and where it seems to be going from here.
Okay. The Leeville royalty is in the Carlin Trend in Nevada on a number of Newmont mines. Mm-hmm. The primary one there would be the Leeville mine. There's also portions of the Turf mine and a little bit of Carlin East. But that royalty footprint expands out to the east and to the west quite a bit, and to what we think is very prospective mineral ground. And also to the south of Leeville, Newmont has made a number of very interesting discoveries with some very handsome intercepts there. Mm-hmm. So currently the Leeville royalties paying us out a couple of $1 million a year. Most of the cash flow emanating from the Leeville royalty is coming out of the Leeville mine specifically, about 2/3 of it. And then about 1/3 of that is coming out of Turf, and then just a little bit coming out of Carlin East. But the interesting thing that's happened is Newmont spent $350 million US to put in a vent shaft. And all that shaft does is pull air out of the Leeville Turf mining complex, mm-hmm. because that was constricting their ability to mine underground because of the lack of ventilation and so on. So you can imagine that if Newmont spent $350 million to build a vent shaft, there's no man cage on there, there's no ore skip or anything. All it does is pull air out of those mines. You can imagine they've identified an awful lot of additional mineralization underground, and of course we're going to be the benefactors of that.
Right. So this key royalty, already paying out several million a year, looks set up to grow from there. To your benefit, so a long-lived, valuable, source of revenue for EMX. There's other royalties that, like you say, either before a project even gets to production, you get advanced royalty payments. Once projects are in production, you get royalty payments. All this money coming in, which is pretty unique in an exploration company, mm-hmm. Which hence the royalty in the name. How close are you to cash flow positive?
Right now, we're in the red on an annual basis by about $1.5 million, $2 million, something like that. So depending on what commodity prices do and our partner companies do with the properties, we think we'll be cash flow positive in 2018. And with that, I believe that we're going to see a material change in the share price as a result of that.
Absolutely. I mean, from a just business perspective, it sounds like you're failing to be negative as a royalty company, but that's not the case. You are an exploration company that's grown a portfolio of royalties, and you're getting to this long-sought tipping point. And so that's like you said, that should be a key catalyst for a re-rating of the stock from more of that project and royalty generator to the royalty company that's still organically growing your portfolio. So that's pretty exciting for sure.
That is really exciting. And like you said, we've largely done this organically. I mean, even the big guys like Franco-Nevada have taken on a lot of debt and have big lines of credit to purchase royalties.
Right.
And buying royalties is an expeditious way to build a royalty portfolio, but obviously it's massively capital intensive.
Mm-hmm. Exactly. All right, and then there's another leg to your to the EMX model, which also includes some strategic investments.
That's right.
There's one in particular that I love, which is this Malmash project in Russia. You own 41% of IG Copper, which is the majority owner of this huge copper gold porphyry in the far east of Russia.
Yes.
We could talk about this project for a long time, but just quickly, why don't you capture what the value of that asset could be and what a transaction on that asset, as in if somebody comes in and buys that asset, a major decides that they need this massive porphyry, what kind of a game changer that would be for EMX?
Okay, yeah, we don't have any designs, nor does IG Copper, on building this project out. That would the capex on that would probably be denominated in billions of dollars. But what we would like to do is monetize this. And since IG Copper owns 51% of the project, Freeport-McMoRan owns 49%. And like you said, we own about 40% of IG Copper shares. We don't have the responsibility to pony up finances to provide for things like drilling. So we have the upside without the liabilities. We've been, aggressively shopping this property around to some of the largest mining companies in the world, whether they're Western companies or they're companies that are domiciled in the Pacific Rim, Japan, Korea, South Korea, and China.
Mm-hmm.
If we sold that, there would be that would drop an awful lot of money, many millions of dollars into our treasury, and I think you'd see a material change in our share price with that.
Absolutely. So this is, one of the challenges with EMX. Sorry, I still call you Eurasian. Lots of moving parts, slightly hard to tell the story in a short period of time because there's lots of projects in the portfolio, there's lots of royalties to discuss, there's strategic investments, but that's also the strength. There's all these different aspects that are contributing to clearly defined current success and possible success down the road.
That's right. So we're kind of a mutual fund of mineral opportunities,
right,
in that with all of our exploration properties, and I think we have about 85 to 90 of those on 5 different continents right now, plus our royalty portfolio and our strategic investments. Really, we are like a mutual fund.
Right. It's a good story. I certainly like it. That's Eurasian Minerals. Thanks for watching.